So what should home buyers and sellers actually expect going into January 2025? Well, we have our December 2024 market stats back, and it's going to unfold a lot of stories that I want to break down, especially if you're looking at moving into the Hampton Roads area, because we're going to look at two trends that's going to be the outlook for 2025 that we'll get into later. But one of the main things that I think that you want to pay attention to is what is going on the south side of Hampton Roads. You know, if you're unfamiliar with the area, we are actually split into two different areas around the 757. We have the peninsula side, and then we actually have the south side. The south side is going to be more encompassing of the Atlantic Ocean and the Elizabeth River and Chesapeake Bay, and then you have on the other side Hampton, Newport News and such that has that's separated by a tunnel basically in our neighborhoods. So what I want to do in this video is break down all these things and more for you and talk about the stats and kind of show you what this detailing when it comes to the housing market and how this is going to be very important whether you're a seller or if you're a buyer. And some of the things that are shaping up that's coming out of this story is going to be talking about inventory and how rates are affecting what's going on in our market today. So I wanted to unpack all of this and more, and we're going to talk about pricing to get started. So let's jump directly over into our market stats for December 2024. And what I want to start with is exactly what you're going to see is we're going to talk about this from an overall standpoint. But what I like to do when we talk about these stats, and maybe with some of the other shows that you may watch talk about market stats, is that I like to detail just residential properties, okay? Because a lot of times if we talk about these things on a granular level, we're isolating some of the information that's not going to tell the full story. So let's just go ahead and uncheck land and multifamily properties out here, because typically if you're relocating to the area, there's a very unique type of individual consumer who's selling or looking to buy multifamily property. So I like to talk about it in the whole sense of what we're looking at when it comes to detached and attached properties. So we have our single family homes, we have our condos, we have our townhouses, because I think that's going to tell a significant story in the difference between what you're going to see across the entire market versus these two type of individual residential properties that's being called out. Like for instance, if I go back and I add in multifamily in land, you'll see that our median sales price across the region is actually going to be around 350, 500. Okay, but if I isolate those out of the equation from our report, what you will actually see is that it's going to go up to 355,000 median sales price. Well, why is that such an important thing? Because realistically, they're so small of an inventory when it comes to multifamily properties and land that realistically, this is where you're going to find the real details in the information that we're going to provide. So let's just get started talking about the differences between what we've seen in median sales price at the end of December in comparison to November, and then we'll highlight the ones that's very important as we talk about what happened just 12 months prior to that period of time. Okay, so you'll see starting in December with our residential detached and residential attached properties together across the entire 757, the median sales price was sitting at $355,000. That's up 1.4% from the month of November and up over 7.6% from December last year of 2023. Now, we had about 1,800 settled transactions in the month of December, which is down 2.2% from November of 2024 to up 9.1% from December of last year as well too. Now we're starting to see homes sit on the market about 26 days. Median days on market is up by 18.2% from last month, which is up about 4% overall from the period of time before. Now, why is these homes sitting on the market a little bit longer? Well, like we talked about and depicted in our last video when we talked about November stats, is that the market softens in the winter months. Okay, as we transition from fall and we get into the winter months around the holidays, November, Thanksgiving, December, Christmas, January, New Year's, we started to see the inventory levels start to flatten out a bit. We started to see inventory not coming to the market as swiftly, but then also buyers and sellers are taking a break from the hustle and bustle for actually having a home on the market. So buyer fatigue may have settled in at this point in time, or buyers are just holding off until the beginning of the new year to get going and not be, dealing with the burden of trying to find a home, doing and spending time with family, shopping for holiday gifts, things of this nature. And then in the same breath, you have sellers who are taking that same break as well too, where they want to, probably spend their last holidays in the home that they're selling, and also, getting the time to enjoy and relax with their family without the hustle of trying to get any and everybody through their home to actually get the house off the market. So that's typically when we start to see these numbers go up and increase during this period of time. And you can see this like a heavy pendulum swing throughout the year, when you see it went from 14, 13 days on the market in March to 26 days now. We're basically doubled the days on market from March to now. So that is what I think that's indicative and indicating of. Now, when it talks about average list price ratio, it basically was flat month over month and flat year over year, where we are basically seeing about almost 100% of what the asking list price is for the home actually show up in a agreed contract with a buyer. So that is actually interesting, and we'll talk about that a little bit here in a little while. Now, median sold per square foot stayed flat month over month to 205, but it's still up 7.3% year over year, and that is actually in alignment with what the median sales price actually shows as well too. We have a median sales price about 7.6%, and then we have the median sold per square foot sitting around 7.3% year over year as well. Now, new listings took a dip in the month of December, where they came down to 1,837 new listings came to the market. That's about 17.5% down from where we was actually at in November, but then it's actually up 16.4% up since December of 2023. So in December of 2023, we were sitting at about 1,578 new listings at that point in time, and now we have more listings in the market. Now, what could be the reason for this? And one of the reasons why I think this is important to note as well too is that new listings in this market in 2024 is a lot different than what you would have saw in 2023 because of the interest rate environment. Now, the interest rates that we were seeing around the December timeframe last year, they were still sitting around the high sixes, low sevens, and in some cases even mid sevens, depends on when you was looking and shopping and buying. So that market was a little bit different, and I can always tell you the first thing that you would hear any seller say about putting their home on the market is, where am I going? What am I going to buy? Where am I moving to? Do I really want to sell my home and go up to that higher payment level? And now that we're starting to see that market sustain, but we're seeing the equity in the market for a lot of these homeowners, especially the ones who bought pre-pandemic. But if you bought early pandemic, you really still see a lot of equity that you can execute, that you can bring to the table, buy down the rate. You can actually, buy down, put 20% down, put 30% down, 40% down on the next home, and still wind up somewhat similar to the payment that you already have based on pulling the equity out of the home that you're putting on the market. And that is making a significant difference now in this market. So I believe new listings going up this year across the board and being up year over year allows for us to see that sellers have now embraced the interest rate, understand that the interest rate environment is not really going to change anytime soon, but realistically, they're not holding back from actually unloading their property to upgrade property, downgrade property, relocate to another area for a different job, or even just retire and relocate to a whole nother market that they want to be in at this point in time. So I think that's important to note. And keep in mind as well, too, as we look at how new listings may have decreased in November to December, but overall, across the year, they have increased substantially, about 16.5% over the time, because I think people have now started to understand what's going on with rates and understand that the market is really holding steady, especially in Hampton Roads, about what is going to happen with the rate market and how it's affecting inventory and impacting the next step in the journey of homeowners and home buyers. So now we're talking about active inventory. It's down about 12% from November to December of this year, by 4,131 homes being on the market currently at the end of December. That's still up 13.4%, which represents about a 2.3 month of inventory, 10% down month over month, and up 3.9% overall. Now, why I think this is important is because still people are, still trying to figure out what is going on with inventory. We still have certain national media pundits saying, hey, the inventory levels are going to increase. We're still potentially at risk for a housing market crash. We're still in an interest rate environment where we can possibly see higher rates, but now we're starting to see the Fed starting to cut rates, and inflation is starting to hold steady. So a lot of back and forth in the public media, but realistically in the national media, we're hearing all these things, But when you're actually living and watching what's going on in the market on a daily and consistent basis, those things are just not panning out like a lot of people are saying and trying to instill fear in other individuals, especially the consumer who is actually, thinking about putting their home on the market and not taking advantage of their equity because they're worried about what's going to happen with the market. Is it going to explode? Is the interest rates going to keep on going higher, or is there going to be a housing market crash, or they're going to lose their equity? But then on the flip side of that, we have buyers who are still trying to figure out, is the rates going to drop? Because if there's a housing market crash, that means that we definitely have to drop rates back down to 2%, right? Well, that could be totally incorrect. And it could actually put you in a situation where by the time you decide to make the decision to purchase the home that you could have afforded at the price point that you wanted to and make that payment on could be substantially less in value and what you can actually afford, and the payment could be still significantly the same or higher in those homes as well too. So it may price you out of certain communities by waiting to see some of these things take action. Now, I'm not saying that this is a time where you need to make a decision on buying, but it is something that you need to pay attention to overall. Now, one of the main things as well too about the 2.3 months worth of inventory that we have currently in the whole Hampton Roads market is that we're still sitting at a situation where we're below the four months of inventory threshold, and we're not nowhere near the 6 months of inventory threshold as well. Well, what's that indicative of? That's indicative of if we're within that 4 to 6 months range, you're actually already signaling that we're in a neutral market, almost shifting towards a buyer's market. But currently right now with 2.3 months of inventory in the whole entire Hampton Roads, we're technically still in a seller's market. But right now, like I always say in any video that we're talking about neighborhoods, we're talking about homes, it's still going to be depicted about what's the neighborhood that we're talking about. Is there a multiple offer situation? Is there homes that are in high demand and in communities that's in high demand, in cities that's in high demand? If some of those things are going to play a point, and then also what makes some of these homes be in buyer markets or in seller markets and differences is based on price points overall as well too. So you got to think about it from a standpoint of, if one buyer is qualified at $400,000 and one buyer is qualified at $300,000, well, the buyers that are qualified at $400,000 could still look to purchase a home at $300,000. So making that competition a little bit more fierce, but the $300,000 can't go to the $400,000 without having the pre-approval for that. So that makes it where the $300,000 may be dealing with more pressure competition versus the $400,000 buyer. Now let's take it down another step even further. Investment properties are now being looked at as $200,000 to $250,000 price range, depends on what city you're looking in the Hampton Roads area. Now imagine being qualified for $200,000 or up to $225,000, and now not only can you be dealing with the buyer who's qualified at $300,000, the buyer that's qualified at $400,000, but also the investor who may have the cash, the 20% down to actually come in and buy that property from underneath you as well, or just a complete cash buyer who wants the investment property. So there's so many different scenarios where buyer demand is actually being impacted, but also this still makes it a seller market across the board in a lot of ways. It just depends on the exact scenario that you may be in as a buyer, or the exact scenario that you may be in as a seller. So now what I really want to do right now is depict some of the things that we need to pay attention to across some of the cities in the South Side. When I went back and looked at some of these stats and kind of looked at it for a little bit, I understood what was actually starting to shape up at the end of December of 2024, and it could also lend way to what we should expect at the beginning of 2025. And I think some of those things are going to be important as well too to pay attention to. And one of the ones that I really want to get into, we're going to save that for last, because you got to see what I saw when I was going through these stats that actually depicted to me that a new story was shaping. And I want to talk about what the impact could mean to you as a buyer, and what it really could mean to you if you are in this city and you are thinking about putting your home on the market. We're going to get into that. So let's jump into that right now, and let's go back and talk about some of the specific cities that I think that you need to be paying attention to, and what our viewers have in high demand across the 757. Okay, so we're going to jump back into the dashboard over here, and then we're going to actually we're going to isolate by cities, and now we're going to go on over and start with Virginia Beach. because you know that's our number one major market in our area, where basically over 500,000 individuals live in that city. So, and we're still going to stay on residential properties, and residential attached properties. Okay, we want to talk about those specifically because this is where a lot of times when people are relocating to the area, what they're going to be looking for. And I want to break that down. Now, if you want us to do something with a little bit more with multifamily properties or investment properties or things of that nature, definitely leave us a comment down below. We'll take those in under consideration, and then we'll bring an isolated video to talk about multifamily properties. And if there's even an interest for land, we'll talk about those as well too. Now, let's talk about the median sales price in Virginia Beach. It's actually down 3.8%, which is going to take us down to about $375,000 median sales price. Now, before I get too far in the weeds, let's isolate those for a second. Let's talk about what condos and townhouses are shaping up to be in the Virginia Beach area right now. Median sales price, you're looking at about 0.2% down to 300,000. And if you're looking at detached residential properties, you'll see that the median sales price is down by 4.3% and down 2.8% year over year to $427,000. So, and you're seeing them sitting on the market about 21 days. Now, what I think this is interesting is when we talk about both of them together, what you're seeing is that the market is still in high demand right now. 21 days median on market. Even though we just seen that overall Hampton Roads is sitting around about 26 days, we're still up 23% month over month. So we went from 17 to 21 days, but we're still down 4.5 days from last year, 4.5% from last year. So from 22 days to 21 days. Now you're still seeing about 100% list price ratios in Virginia Beach. So if you list a house for $450, you're typically getting close to $450 on the home. The median sold per square foot is down 3.8% as well. That's reflective of the median sales price to $228 per square foot, still up 7.8% overall, which is in line with the overall market from year over year. New listings in Virginia Beach is down 27% to 359 new listings. In comparison, that's still up 17% from last year. So about 54 homes extra was on the market this year in comparison to December of last year. And the active inventory is currently down 13.6% as well, from 841 homes being on the market with residential, condos, townhouses to 727 homes actively on the market at the end of December. That's up 15.4%. Could you imagine that we only had 630 homes this time last year on the market, which is incredible to think, and we're still not really getting higher than that. We're still sitting around about an extra 100 homes on the market, which depicts about a 1.7 month worth of inventory between residential properties of detached single family homes, condos, and townhouses in the Virginia Beach area. Virginia Beach is always in demand, and Virginia Beach is going to be some of the higher price points that we're going to see across the board because everyone finds a lot of kind of living out there that makes sense for them, whether you're looking for suburban living, some type of city living, any type of residential property can fit your needs in that area. And Virginia Beach has some of the higher rated schools that you're going to be looking for across the board that fits lifestyle and city all in one, with residential properties being around shopping, dining, restaurants, things of that nature makes it a little bit more. And you have a lot more strip malls in Virginia Beach, so that demand is always going to be there. So I'm not surprised by the $375,000 median sales price. Now, when you start talking about certain neighborhoods and pockets, you could see those prices be substantially higher, sometimes in the mid fives, all the way up to the highest eights, the 900,000s. And the sweet spot for a lot of individuals who are moving to the Virginia Beach area is going to be somewhere between the $500,000 to $650,000 price point. So just depending on where you're at in Virginia Beach is what it's going to look like. But let's jump over to before we head on over to Chesapeake. I want to look at the residential detached properties and show you how much inventory is actually there in Virginia Beach as well too. You'll see active listings at the end of December shows that there was only 197 new listings that came to market in December, which is down 30% from the month over month, which is still up 4.8% year over year. But active inventory for just single family detached homes, we're sitting at 387 homes actively on the market for sale, which represents about 1.6 months of supply of inventory in our marketplace. So in Virginia Beach, this is what I talk about. This is a high demand area. That's what you're really seeing. That's what you're really experiencing. And I mean, it just shows you 250 homes was actually sold in the month of December, which is still up 3.3% and up over 13.2% year over year in December. So let's head back up to put our marker back on Chesapeake here, and we got our residential townhouses, condos, and single family homes lined up. And you'll see that the median sales price decreased by 1.4% month over month to $389,500. That median sales price comes in a little bit higher than Virginia Beach's, and it's still up 9.4% year over year. And then you see there was a lot more transactions that took. Oh, this is what I'm sorry. See. That's what we're messing up there. We have Virginia Beach actually checked. So let's do that again. So, okay, so with residential detached and attached properties with condos, townhouses, and single family properties, you're seeing that Chesapeake is actually at $419,900 median sales price, up 5% month over month, and then up 15.4% year over year, which the settled transactions that we had at the end of December was 243 homes for sale was sold and closed, and that's down 1.6% month over month, but up 23.4% year over year. We went from 197 at the end of December last year, and in this month we went up 243 homes, so about 50 transactions more year over year. Okay. The median days on market stayed flat month over month, but it was up 10.5%. So basically, we're seeing a little bit of an increase in the market. But like I talked to you about before, there's a little bit more homes on the market, so buyers could be a little bit more choosy. So that demand is starting to, increase a little bit more with homes starting to sit, just depending on the marketplace that we're in. Then you're looking at median days on market. You'll see that it had we talked about that, but then we talk about average list price received is up 0.5% month over month, up almost 1% year over year to 100% of list price, or just a little bit more than list price of closed transactions during that period of time. Now, the median sold per square foot went up $221 to 3.8%, but then it was sitting around 12.2% year over year as well too. Now, what does that really depict? That really depicts that demand for Chesapeake homes has increased substantially over the last year, and we're seeing it stay steady month over month. So buyers are really in hot demand to get into those areas in Chesapeake. Now, what makes those homes more in demand than others? What really makes those homes in demand is, I think, the school zones make it a little bit more. See, Chesapeake has expanded. It has grown over the years. You're seeing more bigger subdivisions in that community. There's still a push for new construction in Chesapeake. There's still an opportunity for country living in Chesapeake as well too. And the Greenbrier area, the Western Branch area is still in development. They're still growing. They're still booming. And they're starting to become a little bit more of an isolated, in-demand town areas where you have the Chesapeake Square side, you have the Greenbrier side, where those cities are now starting to be self-structures that are growing, and the infrastructure is growing in those areas. So with that happening, you're starting to see that buyers are looking to be in those communities a little bit more as well too. And then what's really sneaky about the Chesapeake area, especially if you're looking at the Western Branch side, Western Branch has like that quick access to Suffolk on the 164, so that makes those a little bit more obtainable too, to get to certain parts of the area as well. And when you're looking at it from that standpoint, then Western Branch is connected to Suffolk like that. You have the best of both worlds. You can go back and forth from shopping, dining, and restaurants in both areas, and that's a little bit more convenient, even if you're not on the Greenbrier side of Chesapeake near Deep Creek as well. So now you're looking at the median sold per square foot has sitting at 221, but then you'll see the new listings are down 13.2% to 250 listings basically coming to the market in the month of December. But then the active inventory is down 11% to 528 homes. So that's still up 11.4%, and that's still the same type of market that we were talking about overall when we was talking about Hampton Roads as a whole and in general, where seller demand is starting to understand what's going on, and they're just not putting their homes on the market because they got other decisions that's impacting their home and their thought process about putting their houses on the market versus just interest rate environment at this point in time. Now, months of supply, 2.2 months of supply of that 528 homes represents. Now that's down 9.5% month over month and down 9.7% year over year. Now last year we were sitting about 2.4 months worth of inventory, which represented about 474 homes, but we're now sitting around 2.2, and that is going to be significant here. We're going to see that the homes are going to be in higher demand. What I want to do again is isolate just a detached properties to see where we're at with value. You'll see the median sales price was actually up 7% for just single family properties, detached homes, to $465,250. Okay, and you'll see that we have about almost 400 active homes on the market at the end of December. That was just single detached properties, and that represents about 2.1 months of supply as well too. But they're only sitting on the market 18 days or so. Okay, so to me, that is interesting to note, because this right here tells me a bigger story in our marketplace. What this really tells me is that buyers are running out to those areas. I mean, especially if you are looking for school zones, like you have the Grassfield, the Hickory, the Great Bridge school zones that are in hot demand and rated as some of the best schools in our area, especially on niche.com and gradeschools.org, where you can check those out, where they're talking about these schools are some of the best schools in the area. And that's probably why you're seeing this big demand with residential properties take an uptick, as well as if it's being new construction. New construction starting out in those areas are about $575,000 to $650,000 just starting price. So this is where you're seeing a lot of that information come in now, and it's starting to shape up what's going on with the inventory levels as well too. So let's head on over to Norfolk. Let's talk about that area as well. We'll bring back our residential attached properties on here as well. So then let's bring up Norfolk, and then let's uncheck Chesapeake. And you'll see that Norfolk median sales price for December 2024 has risen by almost 2% to $315,000. Okay. And now, just to give you an oversight of this, you'll see 225 settled transactions, which is up 3.2% month over month, up 23% year over year. Median days on market sitting at about 26. So in line with the overall market, you're seeing a little bit less than 100% of average list price received for each home. So there's some price reductions taking place in Norfolk in comparison to the other two cities that we talked about with Virginia Beach and Chesapeake. Now you'll see the median sold per square foot is down 1.5%, down to $200 per square foot, which shows that there is a price reduction taking place in those areas as well too. But it's still up 4.5% year over year. New listings coming to the market is down 13.1% month over month, but up 13.1% ironically year over year to 233 new listings. You'll see active inventory sits about 535 homes on the market, 10.8% down, and you'll see that's up 8.5%, and it's still a month of supply of about 2.4 months of supply, which is a downtick from 2.7, which was a 12.2% decline year over year. Now, the story still stands out the same to me. Inventory is low. Sellers are still being, very cautious about putting their homes on the market, but they're not, being held or being frozen in place by interest rates. That same conversation is there, but pricing is still going up, even if there are price reductions across the board. Now, let's look at in this area. I want to look at detached, but we're really going to pay attention to attached living in this area as well too, because there's more condo properties for sale typically in Norfolk than any other area in our community. So we'll look at that for sure here in this time frame too. Now, you'll see detached up to 324,900, which is about 9,000 more than overall together. And then you'll see that's up about 3.1%, 7.9% year over year. And then you'll see that days on market sits about 25 days, almost there. And you're seeing that average price list to ratio stays about the same across the board. So there have been reductions in Norfolk and Norfolk, how some people like to say it. But then you'll see new listings are down 10.3%. And then the active inventory that we're looking at right now is about 7.8% down, which is 403 homes, and down 11.2% to 2.2 months of inventory in that particular area. Okay, so let's look at residential attached, okay? And then we're going to isolate that again. You'll see condos and townhouses are basically up 8.6% month over month and down 6.3% year over year. This is why I think the impact has really taken place in our community when it comes to residential living in Norfolk, is that the condo market has been in flux. Like, there's just been rough inventory there, and you got to kind of think about it. That inventory is really going to be all over the place because Norfolk is about It was like discovered in like the 1600s or so. So when you're talking about living, when it comes to condo structure living, you're talking about the early 1970s, 60s, in a lot of cases, even a little bit earlier than that. But what you're really seeing is that those properties are, now having to be a lot of flips. There have been a lot of flips. There's a lot of investment going in there. And what you're seeing is that those properties are not really ideal for a lot of people unless you're like living in the Ghent area or down or closer to the downtown waterside area as well too. Then that's where you start to see that those homes are going to, those condos and those townhouses are going to be a little bit more in demand, and those where the price points are actually jumping at. But just looking at it overall, when you're looking at the market, you'll see 281,000 median sales price has been an incredible uptick month over month from 243 in September. October, right? So let's see. September was 332 was the average median sales price for residential attached. It dropped to 243, 258 in November, and now it's back up to 281. At the end of the last year, it was at 300,000. So we have seen this actually have major ebbs and flows throughout the year at a period of time. 33 days on market. So if you're putting a condo or a townhouse on the market in Norfolk, you just have to know that it's going to take probably a little bit of extra time to actually get that home sold, okay? And it's going to probably more likely sell for less than the actual average list price unless it's priced correctly. There's hot demand for it, and you have multiple buyers that's looking that it fits that type of buyer that you're looking for. You have to find that buyer specifically because it may take a little bit more extra time to get that home sold in comparison to the rest of the market. Now, you'll still see it's only was 42 new listings that came to the market, so that's down 23%, but still up 10.5%. And the active inventory is up 22% year over year, but down 19% month over month. And that is actually trending towards buyer market territory. 3.5 months of supply. Remember, our 4 to 6 range is where it's almost a neutral, but anything exceeding 6 is definitely a buyer's market. But you can start expecting buyer demand to be better and buyer negotiations to be better in that 4 to 6 month range as well too. So there's just something to think about if you're looking at attached living in Norfolk. But let's talk about Suffolk. Okay, I think this is going to be a little bit of surprise for a lot of individuals this month that we'll see what's going on in Suffolk. And I want to talk about why this may be happening, what's trending, and what's going on in Suffolk at this point in time. So let's look at it. The median sales price for residential detached and residential attached, 430,000 median sales price right now. That is a major swing, 8% up from November from 398 to 430, which is still up 10.5% year over year, folks. Okay, year over year. Now, settled sales, 137 transactions took place in the month of December for Suffolk, which is down 9.3% month over month and down 7.4% year over year. Now, and then you'll see the median days on market. It's about a month, okay? You can expect to wait about a month to sell your property in Suffolk at this point in time. And then you'll see that they're getting a little bit less than list price as well, too, in this community. And then you'll see the median sale per square foot is down by 1.5% to $195 per square foot, but still up 5.7% year over year, with new listings sitting at about 171 this month, which is down 5.5%. And the active inventory is down 7.1% month over month from 460 homes. And that's about 11.4% up year over year. And the month of supply is at 3.4 months worth of supply, trending towards that 4 to 6 range, okay, which is up 20% year over year and 2.4% month over month. Now, what I will say, I was surprised to see this stat of $430,000 median sales price, and I was like, whoa, no way. But you know what I mean? Let's look at the detached, the single family living, okay? It's actually 438,400, which is up 3.2% and up 11.4%. And that's about 32 days on the market. And it's definitely getting less than 100% of the actual average list price received, okay? And you'll see that they had 150 new listings come to the market, which is up 6.4%. And the active inventory sits about 367, which is down 6.1% month over month, and 3.2 months worth of inventory. Now, what is the reasoning for this pricing? What is the reasoning for, the new listings that we're seeing that's up 6.4%? And really and truly, subdivisions are coming. Like they're really building out subdivisions. See, we had at one point in time we had a lot of um, litigation going on about what was going on in Suffolk with a huge development that's taking place right now with Chesapeake Homes and River Club. I won't get into the details of that, but realistically, off of Shoulders Hill Road, we're seeing a big influx right now of new construction that's taking place over in Suffolk. And what's happening is these new communities are popping up on Godwin Boulevard. They're finishing Planter Station, which we did a video already on the neighborhood tour for that one. It's almost time for an update for 2025 for that as well. So you can check that out on the channel. And then you're seeing a lot more development that's happening on Godwin Boulevard across from Planter Station as well too. There's a lot of influx going on inside Suffolk where infrastructure is growing, subdivisions are coming, prices are booming, and really and truly, this is what I feel has happened. I've lived here over 15 years, and I've been here since 2003. This is my second time being here after we had moved, and we lived in other metropolitan areas in Washington, D.C. and San Diego. And so I'm very familiar with this area. And what you're seeing right now is that the people who love Virginia Beach for, some of the country living, some of the suburban living, being close to shopping, restaurants, dining, they probably have grown in age and then they decided to move to Chesapeake. And when they moved to Chesapeake, that community was still developing and growing and the infrastructure was starting to be put in place and built. And as that has developed, that money has now shifted from Virginia Beach to Chesapeake to now moving out to Suffolk, okay? And right now, you're seeing homes are there's still waterfront property still being constructed in Suffolk. So if you was looking for waterfront property, you're looking for the acreage, you're looking for the square footage, you're still looking for the custom built lifestyle, Suffolk is still providing you that opportunity. And right now, as they're developing and they're growing, Smithfield and Franklin are now starting to build out as well too, around Carrollton at point as well. So there's a lot of opportunities right now seen in Suffolk, and I think that's now starting to reflect in pricing. And even with the average list price received still being less than 100% of what the actual list price is, that still has been a significant increase in pricing. I mean, really and truly, if you look at it here, we've had these swings before. You'll see it was $393, $399, and then you'll see it boost to $420 in April, then $430 in May, and then you've seen it drop off heavily to $380, then $408, $397, and now we're at a bigger increase to $438 in just residential properties as well. Now, if you just want to say, okay, well, what about condos and townhouses? Well, those are up 23% month over month. You'll see 362,935, and it's still down overall 3.2% year over year. But they're getting about the full list price. Whatever they're asking for is what they probably are going to get in the offer. And the median sold per square foot is up 10.3% as well. And the inventories there is 93 active homes are in condos and townhouses, which is about a 4.2 month supply of inventory, which is, buyer centric, where buyers are able to negotiate fair pricing at that point in time. But that inventory is up 135% year over year when it comes to condo and townhouse living in Suffolk. So here's what I want you to do. Comment down below. What do you think about the stats that we talked about on the South Side in this video? We didn't depict Hampton or Newport News in this one, just for the simple fact that I thought that those are on par and in line with what they typically are month over month. But this impact that we're seeing from Suffolk in comparison to Virginia Beach and Chesapeake is starting to actually trend towards Suffolk being more in demand and having an inventory to actually have people relocate to those areas at. Now, one of the major questions that I do get that maybe is worth noting right now in this video is transportation, right? Traffic. What is going on with that? So if say you're relocating to the area and you are stationed in Norfolk, you are at the Norfolk Naval Station, and that's where your assignment is, and you're PCS to that location. Well, the Midtown Tunnel is your best friend, and I know a lot of people say, okay, if I gotta pay for a toll to get to Norfolk, why would I want to live in Suffolk? Well, realistically, I like to tell people all the time, you got to think about it. If the affordability is what you're looking for, and you're looking for certain things in a home, a lot of times those things are going to be a further out, especially if you're looking for like the suburban lifestyle or just a subdivision lifestyle. Like if you want to live in Norfolk, I don't think there's anything wrong with that. But the thing is that a lot of people run into is that they're usually accustomed to a community of homes, right? Some people like HOAs, some don't. But when they're used to a community of homes that all look very similar, maybe not the cookie cutter style or anything of that sort, but you got to get further out where there was land to actually build those type of communities. Remember, Norfolk is one of the oldest cities in America. It's not just in Virginia, one of the oldest cities in America. So that type of community does not really almost exist in a lot of those neighborhoods. They do have pockets, and those pockets are going to be in high demand, or it's not going to be at the value that a lot of people want to see and what they're looking for in a home. Like I'm from Birmingham, Alabama. So when I think about home, I think about how, there are subdivisions everywhere. You can actually, see the same brick houses and things of that nature around on every block. And to see those type of things, you would have to go a little bit further out. You would have to venture like into certain parts of Virginia Beach, Chesapeake, small pockets of Norfolk, and a lot of pockets in Suffolk. So I think Suffolk is now starting to catch a lot of people's hearts. So yeah, the commute, the Midtown Tunnel, you don't have to necessarily take it, but if you don't take it, you could be up to experiencing a 40 to 45 minute commute going down 64, which I could bring up on the map, but I'm not going to bore you with the map. So, and then if you're taking the Midtown Tunnel, you can get there in 25, 30 minutes. You can cut 15 minutes off your commute time. And then if you want to take the longer scenic route during the afternoons on the 64, like I used to, that's probably the best, more ideal communication that you can actually have. So, I think that's just something to take into consideration. I think a lot of people are taking that into consideration, and a lot of buyers are now saying, they're getting, better quality homes or more affordable homes for what they're looking for in Suffolk versus, paying a premium to be in those local communities closer to where they're relocating from. And I think that is what we're starting to see that impact at. So comment down below. What do you think about the South Side? What do you think about what is some of the stats that we talked about? And if there are any questions that you have that you need answered, just definitely leave us a comment down below and we'll check those out for you too as well. Now, I really wanted to talk about a little bit more into average pricing, because sometimes average pricing is not considered a lot. And I want to take a look at price reductions. I know we saw some of that in certain cities that there was a price reduction taking place. So I'm gonna pull price reductions up first. So let's do that on active listings, and we're gonna do that for the last 30 days. Last 30 days. Let's just look at that for the last 30 days, what price reductions look like. And price reductions, we had about 462 homes reduced in the last month or so. So let's look at that for a second. So here you'll see that, which you can't probably see. So let me blow this up a bit for you. Okay, so you'll see that the average list price, it sits around $395,000, and the median is looking at about $335,000. But we had about 462 homes listed, and they all reduced in price. So out of all the active inventory that we had, about 4,000 homes listed, you're talking about almost 1% of those homes are actually reducing in price across the whole entire Hampton Roads, which is not surprising, which I don't find that as surprising at all. But then I want to look at what the average price was for the month of December as well for the whole entire Hampton Roads. I like to do that. I like to show people that because I know we're talking about median. That gives you an idea of what the price points are in certain communities. But we're going to talk about it from a standpoint of the homes that sold across the board, what the average price point was for the whole month of December. And you'll see here the average price point that actually for sold across the whole entire 757 was $435,000 per home on average, and they set on the market about 36 days, and the average price per square foot was about $216.70. So that's substantially higher than the median sales price that we saw for the entire 757, which that median sale price sat around about $355. But then you can see that on average, a home in the Hampton Roads area was in the +4 territory. Okay, so that's where we're at with that. And I want to take a look at rates, and then we'll get into our story for today. What we want to talk about, what some of the things that we're saying is big trends heading into 2025. All right, so let's look at rates, and then we'll jump right into those as well too. So here are the rates that we seen as mortgage news daily shows. It's sitting about 7.1% on 30-year fixed, 6.5 on a 15-year, 7.3 on the 30-year jumbo. Then you have a 30-year FHA sitting at 6.42, and then the 30-year VA sitting at 6.45. And it says that the mortgage rates are probably on a minimum impact. They're moving down slightly. So we'll see how that continues to trend over the next couple days. And you'll see mortgage rates slightly higher today, but generally flat over the past 2 weeks. Says here that the official holiday dates may be in the review, but as far as interest rates and underlying bond markets are concerned, this was the last day of the winter holiday season. The same logic will put the start of the holiday season at December 23rd, a day where the average top tier 30-year fixed rate was exactly the same as it was today. Today's rates had a chance to end up slightly lower, but the bond market responded to a decent showing in this morning's only major economic news. The ISM Manufacturing Index, one of many monthly economic reports that can influence day-to-day rate momentum, didn't suggest any major surge in activity, but it did come in slightly stronger than the market expected. The reaction was logically mild, sending the average 30-year rate up by 0.03%. The stakes increase next week as market activity traditionally increases quickly on the first full week of the year. We'll also get several other economic reports, including Friday's big job report, and consistently in a class by itself when it comes to a power influence on the interest rates. Okay, so next Friday will be a huge day. We'll see what happens there when it comes to the jobs report. But let's get into two of the big housing market trends according to Housing Wire in 2025. And it asks the question, will home prices come down to make housing more affordable in 2025? So I have my take on this. I'll give my opinion on this here in a second, but I really want to know what your take is on what you think is going to happen with the market in 2025. And don't forget, we do have our economic report for Hampton Roads for 2025 coming up with our expectations and our forecasts. We are still crafting that, and we're getting that ready for you, and I can't wait to bring it to you. So definitely go ahead and subscribe to the channel and ring the notification bell so that way you can be the first to learn about what our economic forecast will be for 2025. Now, all the housing market data for 2024 is in, and it's fair to say that the housing market surprised us again, which it did. However, there are two big trends that stand out as we launch into 2025: affordability and sellers in the market, okay? The elephant in the room is affordability. Home prices finished 2024 up a few percent nationally, and mortgage rates are at their highest levels in 7 months, back over 7% as we head into January. In fact, at $2,290, the typical mortgage payment for home buyers is starting the next year at the highest level ever. There are a few markets in the South where home prices have inched down recently, and every bit helped buyers. But those prices have not adjusted much, and there is no sign of any major correction in the works. In 2025, housing affordability in the U.S. remains at its worst levels in decades. In the last few months, the market finally saw some sales growth over the previous year. That growth is in jeopardy if we stay at the high end of the mortgage rates range into the first quarter of 2025. Homes are already staying on the market 20% longer than a year ago. The fastest path to change in affordability is a change in interest rates, but there's no guarantee that rates will fall. Now, that's in line with what we just saw in Hampton Roads, that homes are sitting on the market longer, but it's not really being impacted by interest rates. But the only way that you can get homes to come off the market faster is by what they're suggesting, a drop in interest rates, because buyers are being way more selective in the home buying process, which is fair, which I think is a great thing. Like during the pandemic, it was kind of wild. It was the wild, wild west during the pandemic, but understandably during the pandemic, buyers were buying homes and they was actually, seizing the opportunity for the interest rate, for the payment. So realistically, if you got the home, you had the home based on the interest rate. So your reward was the interest rate and the payment. It really wasn't the home. Now in the reverse, with the interest rates being a little bit higher, buyers are, rewarding themselves with the home because they're going to have to make the payment. You know what I mean? So it's a little different here. And that's why you're seeing homes sit on the market a little bit longer. And I agree that the only way that if that's what we're worried about is having homes coming off the market faster, that's the only way that you can do it is by having interest rates, soften a bit, bringing them down. I think if there was a 5 on any front of any interest rate number, I think we'll be in the market frenzy. As a matter of fact, in 2020, at the beginning of 2024, that's what happened. That's why we saw a big influx in buying, was because the interest rates were starting to show a little bit of a sign of life when you saw fives, and people took advantage and seized those opportunities. But now that we're steadily in the 7% interest rate environment, buyers have to be very selective on what they're purchasing, because they want to get everything they can and squeeze in a home that they can squeeze out of every dollar that it's going to have in their budget for making that mortgage payment. Now, also, I mean, if you're looking at a FHA or a VA, and you're able to put 3.5% down on FHA, but VA, you don't have to put no money down unless you really want to. But really, those usually make sense. So you're still able to get into sixes right now if you have the credit score to get you into the sixes. So there's opportunities. But right now, that's what you're seeing across the board right now. So then it says, in the Housing Wire mortgage forecast for 2025, we included the possibility of a 5 handle during the year, meaning that the interest rate could see 5 of some form. Okay, what's the scenario where mortgage rates drop down over 100 basis points in 2025? If we get lucky on economic news and spreads continue to tighten a bit, we could see some alleviation to the affordability vice everyone is now in. Okay, let me get some tea real quick because we got some more conversation here to go through. Okay, so the other trend to watch is whether we finally have more sellers entering the market in 2025, which I think we will. The 3 years in the post-pandemic housing market have been marked by very few sellers. 60,000 new listings in a given week versus 80,000 in years past. There are some signals that seller volume is starting to creep back to normal levels. Let's look at this week's data and see if we can tease out the signals for impact on the 2025 housing market. Inventories continues to contract. There are now about 651,000 single-family homes unsold on the market across the U.S. That's 2.5% fewer than a week prior. It's the holidays, of course. We'll see another week of inventory contraction this week with the New Year's midweek. So basically, we're seeing that market is still in flux on inventory. We're still about 20,000 homes less over week in comparison to the prior to the pandemic. So we still have a lot of catching up to do to bring forward more inventory into the market. Until we bring that inventory into the market, we're still seeing that market is going to be very, very tight on home inventory right now. So some years when demand is stronger, the available inventory of unsold homes keeps shrinking until February or March, which is in line with Hampton Roads. But demand is not strong naturally, so we expect inventory to bounce along under 650 homes in January and start ticking up by February. Inventory is increasing in basically every market around the country. We just talked about that in our report. The Sunbelt markets have had inventory growth, with the northern markets much tighter, but we see the disparity evening out a bit in 2025. And here we go. New listings are low. As we look deeper into the supply side of the market, there were 32,500 new listings unsold this week. That's very low over the holidays, but it's notable that for the last week of the year, there were more new listings this week than the same week for the past 6 or 7 years, which we just discussed again. So Hampton Roads is following the trend, and Housing Wire is basically in line. It's basically speaking to the Hampton Roads market right now. It's hard to measure precisely with the holidays, but 32,000 is 33% more than hit the market in the 52nd week of the year 2023. This is probably related to when the holiday hits on the day of the week. The thing to keep an eye on is that each week in December, we have much more normal levels of new listings each week. These are unsold new listings. There's another set of sellers that we call immediate sales. These are the houses that get listed and take offers immediately after listing. They don't ever add to the active inventory, so as they're already sold. When we include these new listings, there were 21% more sellers than a year ago. Now, this is critical. I think this is important to note because I said this without really saying this in full detail. I didn't spell it out just like they just did, but I want to give it a little bit more clarity to it. So the median days on market shows how long homes are sitting on the market from the active inventory that we actually currently have. But there are scenarios where we talked about it before where buyers are going after homes that are in hot demand. that's where I think the seller's market is. So we talked about what certain neighborhoods, certain price points, certain features and amenities that buyers are looking for every ounce of their mortgage payment. That's what they're looking for, and they're going after those. Remember what I started with: if you are pre-qualified for 400, but then a buyer's qualified for 3, or a buyer's qualified for 2, what's stopping the 4 and the 3 from being in competition with each other? Because the 4 can go down to that level to basically, compete for the same home. And some of these homes are in demand. And when they're in demand, they're getting on the market one day, they're coming off the market the next day, they're closing within a week, 2 weeks, or even by the end of the month, and they are not contributing to the active inventory. They are contributing to new listings, but by the time those new listings come to the market, they're already off the market. So that's a significant thing that we don't really pay attention to, and that's happening a lot. I mean, we didn't go back through and talk about how many homes were actually sold within a week or so, but realistically, there's a lot of opportunities that homes are showing up on the market based on the condition that they're in and coming right off the market like the same day and within 24 hours or even 48 hours after being listed. So that is critical to this conversation as well too. Now, you'll see we've been averaging 8% more sellers each week. There were only 5,000 immediate sales this week. That's the fewest we started measuring this phenomenon during the pandemic. Again, it's the holidays, so there's a lot of noise around the day of the week that Christmas and New Year's fall. So keep an eye on the new listings count as we round into the first quarter of 2025. It could be that the shortage of sellers is finally abating. Pending sales are increasing. When we look at sales volume, there is 269,000 single-family homes under contract. That's 4.2% more than where we ended 2023. It's the end of the year, so there are 8% fewer homes under contract now than from the week before Christmas. This is the week of the New Year's holidays, so we'll have one more week of declining home sales before the January uptick begins. This chart, which is not up there right now, is the total count of single-family homes under contract. Each line is a year. The red lines are 24 and 23, which have very few home sales. That's just the start to increase. At the left end of the chart, you can see that 2025 is starting just above the previous year. These are contracts pending, so these sales will close in January. There are 30% fewer home sales in process than at the start of 2022. When the pandemic frenzy was still underway, still you can see why we're forecasting 2025 to have 5% sales growth over 2024. So they're forecasting 5% more sales across the United States nationally. So they think that total sales will go up by 5%, which is a slight better increase than the normal average. I would go on record of saying. It's going to be fascinating to watch home sales next month. How sensitive are home buyers to 7% mortgage rates and this latest affordability punch? Do we lose all the sales momentum that we've seen lately? The new pendings average down to 44,000. The recent 4 weeks includes both Christmas week and the late Thanksgiving week this year. Still, the week new pendings average is about 1.3% above last year. Keep your eyes on pending data. I remain optimistic that we'll see some sales growth in 2025. Okay, so do we think that pending sales will actually, decrease, or will buyers balk at 7% and think about what would they do next? I'm still standing fast. Buyers who are in the market are buyers who are in the market for whatever the particular reason they're in the market. They're not window shoppers. Okay. We have buyers who are relocating to the areas. We have buyers who are selling their home and downsizing. We have buyers who have outgrown their home and upsizing. We have buyers who have significant equity in their home and they're selling that home and deciding to, take advantage of the equity and get them a better quality home, a nicer home, or relocate to a whole different area. So they're buying in a whole nother area nationally. I think you got to think about it. Like sellers sell as well too. Sellers usually sell for relocation. They really sell for downsizing or upsizing as well too. Then you also think about that there could be an illness, death, or a divorce, all type of things that happen across the United States. So we are always in a market right now where the interest rate is important, but realistically there's other things that are taking place around the interest rate that affect both buyer and sellers in a lot of cases, and that's why we're going to see what happens with pendings. So I'm not really, even if we do see a downslide in affordability, or we see a downside in sales or pending sales, I still think there's an avenue where that doesn't stop others from taking advantage of the marketplace. And even if we take that slight dip, that would be a reactionary measure where we would see a quick climb back to the top on pending sales, either way it goes. So let's continue the story. Home prices lead to the affordability challenge. Let's move on to home prices and the affordability challenge. Nationally, home prices are starting in 2025 at $395,000, which is 4% higher than a year ago. If you follow the Altos research data each week, this won't surprise you. Even when home sales are low, when inventory of unsold homes is building around the country, and when affordability is at a crisis level, home prices have not fallen. In fact, they're inching up. In this view, we have the median price of all the homes in contract. The red lines for 2024 across the top home price clusters right around the big round numbers. In this case, $400,000 for most of the year. It turns out that due to a huge number of factors, including seller psychology and legal and tax reasons, it's rare that home prices fall year over year. This view shows us 2022, when after the pandemic mortgage rate spiked up way up higher and faster than anyone anticipated. That's when we went from 2.5% to 3%, 4%, 5%, 5.5%, slowly to 6%, slowly to 6.5%, 7%, 7.5%, 8%, and then we settled around 7.5%, then slid down to 7%, 6.5%, 5.9% like at the beginning of 2024, and then we kind of measured our way back up to 7.1% across the board for the rest of 2024. Now, the crazy thing is July of 2022 and June of 2022, that interest rate was pinging. It went from 4 to 4.5, 4.75, 5.25, 5.5, 5.9, 6.25. It was across the board going crazy all of June 2022. So I remember this like it was yesterday, which is crazy. So the important lesson from the data is that while affordability is the paramount issue for home buyers, we haven't seen any signal that the price of homes will correct down. Meaning they're saying home prices are staying steady, and we don't see a path where they could drastically change and start going in the opposite direction. So this is for the buyer who is listening. Is this the right time to buy? I'm not here to tell you that you should buy. I don't think you should buy if you can afford to buy. I always think that. But also, if you're waiting for a huge reduction in prices where you think you can go in and get you a bargain sale, I don't know if you're going to see that anytime soon. Remember, during the pandemic, prices increased. In 2008, when we had the housing bubble that everybody keep on thinking that we're going back to, homes was about 50% off. We're nowhere near 50%. Matter of fact, we might be 50% up after the pandemic. Even after the pandemic, if you bought before the pandemic, you're probably up almost 150% up. But I won't say 150%. That's drastic. Let's say you're up about 65 to 70%. And if you bought after the pandemic, you may be up somewhere between 10 to 20%, even 25% in certain homes. But then take it another step further. If you bought prior to the pandemic, lived in that house for a while, now you may be up 125 to 130% on your home. So, let's think about this, that rates have not given people opportunities to think they was going to go on a fire sale to buy homes. That's just not what's happening. And I don't think that's going to happen because of the simple fact that more homeowners can afford their home, and no matter what happens, if they have one of those 2% or 3% interest rates. Like, it's just hard to tell me that someone can't afford a $1,100, $1,300, $1,400 payment on their $450,000 to $500,000 home that is worth in value. Matter of fact, they can literally go out and get a home equity loan and catch up the mortgage if they really wanted to. I mean, it's so many ways that this thing could play out now that it's just hard for people to run into these type of situations. So, price reductions higher than in quarter one of 2024. You'll see finally, let's look at the leading indicators for home prices as we start 25. There are currently 36% of homes on the market that have taken a price cut from the original list price. That's more than we started 2024, which indicates slightly weaker supply and demand balance than a year ago. Okay, we saw about 1% of price reductions in the last 30 days across Hampton Roads. So there are 27% more homes on the market and over 4% more sales. So you can see why slightly more sellers are trying a price reduction than a year ago. Still, the number is not tremendously high. It'll keep falling in spring with fresh inventory and new buyers for the next few months. If mortgage rates stay over 7%, they'll keep a lid on buyer demand, and some of those sellers won't get the offers they were hoping for. Buyers are perfectly happy to wait while sellers have to act. This is true. I do think this is a great point here. We'll talk about that in just in 1 second. These price reductions are a leading indicator for future sale prices. The numbers elevated now, and with 7% mortgage rates to start 2025, we're going to see right here how much home buyers care about this affordability hit. And that is my point. That is my point, and that's how you bring it home. I agree completely with that last statement that affordability will be the sticking point for buyers, and sellers are not just going to be able to put anything on the market. Now, there's going to be some individuals who are going to want to just buy a house because this is what the house they feel like they need in their life, and there's going to be a difference in what you saw during the pandemic and what you're going to see now as we start 2025. I think that, and I've said it before, and I'm going to repeat myself, so if you heard this before, excuse me, but I'm going to say it again. During the pandemic, you was rewarded with buying the house for the interest rates for the payment. So if you got a junk house during the pandemic, I can understand how you felt like you didn't get the quality of home that you wanted. But in 2025, at the end of 2024, most homes that you was purchasing at that higher interest rate environment, you was rewarding yourself with the home. So you don't really necessarily have a junk home. You have a higher quality home, but you have a higher affordability problem too as well too. So, but I think buyers will stick to their ground on that. You know, they care more about affordability and quality versus what we saw in the frenzy of the pandemic, and that's going to continue to keep pricing sustained across the levels. So I think that this is a great indicator and things that we need to pay attention to. So comment down below. Do you believe that inventory will stay consistent, or do you think that we'll see more inventory come into play and home prices go down, or do you think buyers will still be restrictive in what they're looking to purchase and only buy quality with affordability in mind? Hey, I hope that you got value out of this content that we provided you today. This is our December 2024 market sales recap for the Hampton Roads area. If you found value in this, definitely hit us with a like. Go ahead and subscribe to the channel. Definitely ring that notification bell. If you are thinking about relocating to the Hampton Roads area, whether that's Norfolk, Virginia, Suffolk, Portsmouth, Chesapeake, Hampton, Newport News, even Williamsburg, definitely feel free to give me a call, shoot me a text. Don't be hesitant to even give me an email, or just go on our website, register, browse properties, and reach out to us if you have any questions or concerns. We would love to help you make a smooth move in the Hampton Roads area in any part of town. So I hope that you found value. I'll catch you in the next episode. Y'all be safe. Peace.